The year is more than halfway over, so I'm going to give you an update on where we've come from and where we are now. I'm going to start with sellers. They've been in the driver's seat for a very long time, but supply is rising, so this party may be coming to an end for sellers. Supply is up 51% in the last 5 months, but that is up from historic lows. So we're at about 6,300 listings as of July 26th. Normal is somewhere between like 15 to 20,000. Sellers are not paying more concessions. In our extreme market, 3% of transactions have a seller paying a concession. Normal is about 25%. Price reductions are way up. They're nearly triple what they were 5 months ago. That's what we're going to continue to see over time. As the market simmers back down, not crashes, we're going to simmer. We'll start seeing increases in the days on market, seller concessions, prices coming back into the stratosphere. Demand falling a little bit. People are pulling back. As prices increase, the fewer people can afford them, which is typical. People buying right now, active buyers are second homeowners, investors, a lot of first-time buyers, but again, this is going to be dependent upon the affordability and these other factors, whether they can actually get in the door. We talked about values rising. Again, supply is down, values are up. The median home price hit a record of $405,000. That's a lot from where we were maybe about $280,000. A little bit over a year ago, maybe 2019. It's a big number, it's a big jump. We're talking about appreciation being 3% a month. That's been since about May of 2020. 3% a month is a big gain. For the previous 5 years before that, we were only going about 0.5% a month, which is totally normal. But things have changed a lot, and we expect them to simmer back down because all the things must come to an end, right? For sellers, bottom line, sell now if this is in your plans at all on the radar, or just stay put. Pick one and do it. Let's look at things from a buyer's perspective. Again, we said the supply was rising. That's great news for buyers. They want to see more. They want to have more options. From 300 to a million, you do. Really, from about 400 to 800, you have way more options. Buyers there can take a little bit of a breath and start breathing easier. Permits are again, builders are rushing to get product to the market, and material costs are falling, which is good news. It'll cost less to put a home out there or to buy a home. Then affordability, that's a big factor for us. This is what we're watching very closely. If the median income can't afford the median home, which again right now median income is right around 80,000, median home price is about 405,000, at least 60 to 65% of people can't afford the median home price. That will affect appreciation. That will affect the market overall. We're very, very close to that number. Interest rates, again, still low. They've been low. We just had another little dip. It's a great time to get in and take advantage. If you don't, when the market ultimately corrects, which it will, it always does, you have less buying power. You can afford less. If you decide to wait for a balanced market or for a buyer's market, in theory, you'll have less competition. It'll be easier to buy. However, if prices go up and you're at a threshold right now of 400, and really by that point it's going to be, 410, 425, you have to pay that much more. And if interest rates increase, you can afford that much less. So the same house today that with a 3% or 3.5% interest rate is going to be less affordable when it's at 415 or 425 and the interest rate is closer to 4. Think that through. If you're looking at rent versus buy, median home, 1,500 to 2,000 square feet, to lease it costs $1,995. To buy it, if you can afford it, about $1,843, somewhere in that range. That's still pretty low. If you can afford the down payment and you can afford the maintenance and the rest, and you're going to stick around for a while, probably makes sense to buy, but that's for you to decide. Bottom line, buyers, if you can dig in, do it. It isn't going to get any better than this. Sure, you can wait 20 years and it might be better, but you'll be throwing away rent for the next 20 years. You factor through that. Overall, we're looking at balance. We're expecting balance sometime by the end of this year. Call it December. And again, balance is when neither a buyer nor a seller has an advantage. It's an equal market. The rest of the market is going to self-correct. It does. Supply and demand play off of each other. Further they move together, the less disruptive, and the further they move apart, extremely disruptive. That's where you get these wild seller or buyer's markets. 2005, boom. 2010, bust. 2020, 21, boom. That's what I got. Hopefully it's helpful for you. If you still have questions, give me a call. or text or email me and we'll go through them together. Take care. I'll talk to you soon.